Witness in your handy dandy notebook. Witness number 2. Witness number 2. Again, if you want to follow along with your own deck, it is in the members area. Okay. Day 2. Decision-making time. Decision-making time. DMT. One of the most beautiful things in the world if you do it right way. Okay. All right. 1 second. Why is that there? Interesting. What happened? What happened? That's too long.
Hey, Chris, while you typing that link is to a Skype. It say check out at skype.com.
Yep, that's correct. That's correct.
Oh, that's for the 30 days. Okay, my bad. I got you.
Yep. Why is my computer freezing? Interesting. Oh, God, 1 second. Something. My computer just froze on me. 1 second. And you guys can still see and hear me, right? Because everything on my end looks frozen.
Yeah, it kind of just went out a little bit, but
Just breaking up a little bit.
All right. Okay. I think we should be good now. Just for the time. All right. Witness number 2. Witness number 2. Witness number 2. Witness number 2. And this page is not in the document. I will put it in there. Witness number 2 is exponential moving averages, DMTs. Okay. Exponential moving average, that's the EMAs, and then decision-making time, which is DMT. Decision-making time, which is DMT, okay? So this is what exponential moving average is, or EMA is, okay? An exponential moving average, EMA, is an average price calculation over a specific time period that puts more weight on the most recent price data, causing it to react faster to price change, right? Now, this is what an EMA is. Let me show it to you. All right, for example, we got Michael Jordan and LeBron James, right? I know most of y'all for the 5-day challenge, y'all all said Michael Jordan was the best and was the greatest of all time. If you think LeBron James is the greatest of all time, you can leave now and I will give you a full refund. No hard feelings, okay? You're rocking with Jordan over here, all right? So say, for example, game 1, Jordan scores 30 points. A line starts to form right here for Jordan's points per game. So now we have a line right here. Next game, he scores 35 points. The line starts to go up. The next time he scored 40 points, the line goes up. He scored 50, the line goes up. He scored 45, the line goes down some. He scores 30, the line goes down some more. He scores 60, the line starts to go back up. Okay? That's the exact same thing what an EMA does. This is what an EMA does. EMA, the price of this stock is at $10. It goes to $15, so the EMA starts going up. It goes to 16, 17, 18, 19, and the line goes up. It goes down to 15, it starts to go down. It goes down to 12, it goes down. The EMA takes you on the journey, okay? It takes you on the journey of the closing prices for a certain amount of candlesticks, okay? All right, so that's what an EMA is. Strictly just a line that starts to form over time. All right, line that forms over time. Okay. Now, as far as for us, what EMAs do we utilize, and what type and how many EMAs are there? Okay, so we use the non-EMA 21 EMA, and the 200 EMA. But there's multiple EMAs you can use. You can use the 9, you can use the 8, you can use the 21, you can use the 20, you can use the 50. But we focus on mostly the 9, 21, and the 200. So what the non-EMA is, the non-EMA show you the non-close, that shows the average of the non-closing candlesticks, okay? So if candlestick 1 closes at 10, candlestick 2 closes at 11, 12, 13, 14, you're going to see a slow line creeping up, okay? And what does that tell us? That tells us that the price of that particular stock is increasing. It's going up, 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 okay? That's what it's actually telling us. But the thing about it is, you don't have to worry about it at all. The reason why is because the line automatically is drawn for you by the system. You don't have to draw the line. The line is drawn by the system automatically for you, okay? That's the non-EMA. This is the line we follow. If you ever get lost, always go to Big Mama's house, okay? If you ever need somebody to call, always call Big Mama house. When a while you always call Big Mama house, Big Mama always gonna be at home. That's what my mom always tell me, right? When we was younger. If anything happened, call Big Mama, okay? This is the same thing. If anything happens, you follow that non-EMA, okay? If that non-EMA is going up, you go up. If it's going down, you go down, okay? And that non-EMA is green. That's the line, that's the color. I made it on my screen green, but you can have it whatever color you want to have it, but I made mine green, okay? The 21 EMA is the exact same thing as the non-EMA, but it's the 21 closing candlestick, so it moves a little bit slower than the non-EMA. The non-EMA will move faster because it's taking into account less candlesticks. The 21 EMA will move a little bit slower because it's taking into account 21 candlesticks, okay? And on my screen, it's yellow, right? The next one is the 200 EMA, okay? The 200 EMA, we use this as to show like what's the trend over the last 200 candlesticks, okay? So if this, and it's red on my screen, if it's trending up, that means the market is in a trend, is in an upward trend over the last 200 candlesticks. If it starts to trend down, it's in a downward trend over the last 200 candlesticks, okay? So the 200 EMA, it shows you trend, okay? It shows you the trend, all right? Okay. Any questions right there before we move forward? Any questions before we move forward? What's going on, everybody? Christopher Jackson here, and I'm so excited for this upcoming 5-day mastermind starting February 27th. This is not a challenge. This is a mastermind, and we're going to dig deep. I'm going to show you how to make additional income trading stock options while still working your full-time job. The goal is to show you that you no longer have to rely on your full-time job to take care of all of your expenses, right? And you can use money from the stock market to take care of all of your expenses, to pay your mortgage, to pay your car payment, pay your gas bill, pay the daycare, to pay your on your vacations, whatever you may have expense-wise, you can use the stock market to pay it. And we no longer have to rely on your full-time job to take care of those responsibilities. Because if your full-time job tap you on the shoulder and say, hey, listen, your services are no longer required, what then? If you don't have another source of income, now you're in a panic because you like the bills are still due. But if you have another skill set that you can do for the rest of your life, which is trading stock options, you are no longer relying on your full-time job to take care of your household responsibilities. Okay, so that's what I'm going to show you in this 5-day mastermind, how you can control your life and not rely on your job to take care of your responsibilities, but you can make money trading stock options while still working a full-time job. Listen, we have two options. We have VIP and we have regular admission. VIP is $497, regular admission is $297. I tell people to do the VIP. Why? Because you get more time with me. You get additional hours with me every single day. Okay, so listen, if you're interested, click the link below, and I want to see you in this mastermind. This is not for the weak. It's not for the weak. It's not for the weak. This is for the individual that's just sick and tired of being sick and tired, okay? So I see everybody in this upcoming mastermind. All praise to the Most High. Let's go, baby.
Liv better said she couldn't see the EMA slide on day 2 deck. I'm not sure if anyone else having that problem.
Yeah, I realized it's not in there. It's not in there. That's why I just switched it over. But I will definitely upload it back in there when I will upload it in there when tonight. That's what I will do.
Chris, I got a question about the EMAs.
Yes, sir.
Do they move in real time, or how do they move as far as, are they
Yep,
laggy
so-
or they real time?
Nah, so as soon as that candlestick closed, it starts to go. It moves every time that candlestick closed, depending on which time frame you're in.
Okay, cool. Thanks.
I think someone has had a question just now. The 21 EMA will always follow the 9. Yes, for the most part, yes. All right, any other questions before we move forward?
Hey, Chris, I have a question.
Okay.
Yes, so regardless of what time frame that you use, be it a 15-minute, whether you're a day trader or swing trader, if you can choose a non-EMA or either one. And so when you're looking at a market, it doesn't really matter. It just depends on what time frame you're looking at based on whether you can tell when you need to enter or exit a trade.
Yep. So the concept is the same across all time frames. No matter if you're on the 1 minute time frame all the way to the 1 week time frame. Yep. And we're gonna get into that in a few. Good question. All right, William, on you, William.
Yeah, I have a quick question. Okay, does the 9 and the 21, those represent anything? Is there any significance to those numbers?
So we use the 9 EMA and the 21 EMA because mostly the market, for the most part, these are some market numbers. They use these numbers for the most part. So therefore, if the majority of the market is using these numbers, we want to follow suit because this is what other hedge fund companies are looking at. Okay, that's why I said some hedge fund companies also throw in the 50 EMA and they use that as a level of support as far as entry. If you're on a downward drop, you may put the 50 EMA there. And when the stocks get there, that can be a buying opportunity. So you want to think about also utilizing the 50 EMA as well. Okay. That's a great question. All right.
Thank you.
Yep, no problem. Okay. All right. So now, witness number 2, decision-making time. This is what decision-making time looks like. Okay. When the green line and the yellow line are right beside each other, on top of each other, like white on rice. Okay. Right beside each other. That's decision-making time. Whenever you see a decision-making time, people, listen to what I'm about to tell you. If you're a swing trader and you're looking at the 1 year, 1 day, and you see decision-making time, start licking your chops because you are about to make money. Hands down, period. You're about to start making money. You just have to wait for the right opportunity to see which direction we're going. It may take 10 days before it starts to show its hand. It may take 20 days before it starts to show its hand, right? Like, for example, let's use this for example. Someone that's always late to work, okay? They're always late to work. And they start a new job and they say, I'm going to be on time. I'm going to be on time. So they on time for 5 days. And you just got to sit out there and say it's only a matter of time before they show their hand. They're about to be late eventually. And eventually, they late. And when they late, what happens? That green line goes up or that green line goes down, okay? Here's some more examples. Right here, decision-making time. Green line, yellow line, right beside each other. Green line, yellow line, right beside each other. Right beside each other. That green line, boom, broke up. Went straight up. Beautiful picture, beautiful picture. Right here, again. Green line together, green line, yellow line. When you see it on the 1 year, 1 day, also, if you see on the 4-hour time frame, it's golden as well. Because the 4-hour time frame will happen a tad bit faster than the 1 year, 1 day. Something to think about, okay? You're gonna notice those things as well. But right here, decision-making time this day. So this was a day and a half. It was decision-making time for a day and a half. Next thing you know, it broke out for a few days. And then maybe like a week later, it came back to decision-making time again, broke out again. Then it came back to the owner, broke out again. If you're swing trading, you could have took this trade, took profits, took this trade, broke profits, took profits, and took this trade and took profits. It's a beautiful thing once you start recognizing. And what I would tell people, if you're swing trading, for the most part, look at the 1 year, 1 day. But if you see a decision-making time on the 4 hours, well, that's strong, y'all. That's very strong, okay? All right, look at some more. The downside, decision-making time. Green, yellow, right beside each other. Green, yellow, right beside each other. Boom, fell down. Green, yellow, right beside each other. Green, yellow, right beside each other. Boom, fell down. Green, yellow, right beside each other. Boom, fell down again. Okay. So check this out. Another way to look at this, okay? Think about when you're dating, okay? Say you're dating someone and you're in a relationship, all right? Now, when you're in this relationship with someone, y'all just met, you all googly-eyed, googly-mooglies and all that stuff, right? It's just you got the butterflies in your stomach every time you see that person, okay? And then if that person come up to your house, you got to make sure your house clean. You're going to light some candles. You're going to make sure your hair done. The fellas going to get their hair brushed and get the tape line straight. Throw everything under the bed because their house probably dirty, right? And throw everything in the closet because their house probably dirty, right? You know what I'm saying? So that's the stage you're in. So right here, when that green line, that yellow line are right beside each other, that's what's going on. Okay? That's what's going on right then and there. Okay? So boom, the green line, yellow line, right beside each other, right beside each other, right beside each other. Then in that relationship, $50, whoever answers this question correctly. What happens in a relationship at all times? Everything is going great. Somebody asks a question. What question is that?
What are we?
There we go. William Lumpkin said it, I think. William Lumpkin said, he wrote it. Somebody else said at the same time that William Lumpkin wrote it. We got to give it to William, okay? William, send me your Cash App. And everybody who got Cash Apps yesterday, I sent everything out on Sunday. Okay, so you get it on Sunday evening, all right? So, boom. They asked the question, what are we? What are we? And now the person who receiving that question look like this. Really? Seriously, did you really just ask me that question? You see what I'm saying? Like, really? So then you got a choice to make, okay? And I call those choices, choice one, jagged edge. There you go. Meet me at the altar in your white dress. Or Chris Brown, it's never the right time to say goodbye, okay? So if it goes up, boom, that's jagged edge. If it goes down, boom, that's Chris Brown, never the right time to say goodbye. I gotta make the first move because if I don't, you're gonna start hating me, okay? So once again, let's go through another example. Let's go through another example. Right here, okay? We have decision-making time. So right here, green line, yellow line, right beside each other. So we're dating. Everything's good. We're going to the movies. We're going out to eat. Everything's good. I'm opening the door for you. All that good stuff for you. You go on the phone with your girlfriend and your home girlfriend. Oh, he's just a gentleman. He's so sweet. Oh my gosh. Oh my gosh. And then the fellas, yeah, man, yeah, she bad, bro. I got me one. Yeah. She tough, bro. She tough. Next thing you know, somebody asks, so what are we? What are we? You like, did you really just say that? Now I gotta sit down and evaluate what's about to happen. And if this person says, listen, I want to be with you, jagged edge, meet me at the altar in your white dress. We ain't getting no younger, we might as well do it. Okay, that means it's going up. That means buying calls. We're buying calls. Jagged edge means we are buying calls because a decision has been made that we are going to be together, that we are going to the altar. We are going to buy calls. We're going to take this ride. Okay? Okay? I don't know, Mr. Johnson, what happened to opening doors. I say open the door for my lady sometimes. I did say sometimes. I'm sorry. Okay? Now, this is an example of Chris Brown. So let's do it again. Listen, we're dating, everything good. We're dating. We're going on vacations. We just having a great time. Smile for the gram. Take pictures for the book. You know, everything good. Everything good. Couple goals, all that stuff, right? We all that. Next thing you know, boom. What are we? That person say, it's never a right time to say goodbye. Chris Brown. And boom, we break up. The market goes down. We going down, baby. Going down. Okay? So you got your Chris Brown, you got your jagged edge. You got your Chris Brown and your jagged edge. Your jagged edge calls, Chris Brown is going down. And when you have that green and yellow line, they have to be horizontal to each other. You don't have to be touching. Like, for example, right here, you see they're not touching. For example, right here, you see they're not touching, right? But they're horizontal from each other. They're right close to each other, not touching. That's still considered a decision-making time, okay? All right, someone had a question?
Yeah, when they're dating, is that like consolidation?
Booyah. Exactly.
Oh, okay.
Exactly. It's consolidation. And listen, anytime you consolidate, consolidation leads to breakouts. Consolidation leads to breakouts. You just got to be patient enough to understand which way it's going to go. Okay? I think someone else had a question as well. Tracy, go ahead.
So if it's going down to Chris Brown, will we be making a decision or should we just wait for, I don't know, some other?
Oh, you got it right. You got it right. Chris Brown equals puts. Chris Brown equals puts. Okay.
So when I see that it's going down into the Chris, but I don't listen to Chris Brown. Okay, I'm like I'm a Kendrick Lamar and some Ella Fitzgerald. But so when I would try to create a put contract. That's when I would make the decision. Is that around decision making time? Just say, okay, let's see how far this go, and just probably go and put in a put contract, right?
Exactly. But we're gonna show you. We're gonna keep. Remember, this is only another witness, right? We're gonna build upon the witnesses to give you a better understanding of your entry. Okay, this is another witness that we're gonna put with all the other witnesses to give you your confirmation. Okay, but your thought process is absolutely right. When you see that decision-making time, that green line breaks down, that's put city. Chris Brown. If it breaks up, jagged edge. Meet me at the altar in your white dress, okay? This is the story, y'all, that the market is telling you. This is a decision, this is an EMA, and it's telling you this beautiful story. Only thing you have to do is what? Know the story. All right? Okay. So let's keep going. Let's go find us some decision-making times in the actual market. Boom, boom. Let's find us some decision-making times in the actual market.
I have a quick question, real quick, before you go.
Yep, go ahead.
Okay, so the yellow and the green line, right? Is that those lines, which is the EMA, right? You create those lines, or that's something that's
an indicator. It's already there's an indicator. So what I do is watch this on my screen. You see my screen right now?
Yeah.
You see that red and green line? You see the green and yellow line right now?
Yeah.
Watch this. Boom, 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 boom. It's gone.
So, okay. So it's pretty much like a guide.
Yep. It's basically, we call them indicators. Okay. And basically indicators are they're here to help us and guide us through the process. Guide us through our story. Okay. Think about it, it's like commas and periods and exclamation marks. When you're reading a book and something dramatic happens, somebody slams up and down the desk, they put an exclamation mark on it. That's to tell you that this is something powerful that happened. Same thing right here. These EMAs are here to tell us and to help us guide us through the story so we can start from the beginning of the book, get to the end of the book. And these indicators that we're going to use are going to help us get through the story so we can understand the story. If we had a book that had 0 periods in it, it just had sentences going, lines going, we wouldn't know when things starts and when things end. We have to have these indicators to kind of help us with the story, okay?
All right. Thank you, bro.
Y'all with me? Y'all with me? Give me ones if you with me. Give me twos if you completely lost. Ones if you with me, twos if you completely lost.
100% with you.
Is the red line an indicator also?
Yes, it's all there. Yep.
That's an indicator.
EMA.
Okay.
Yep.
Okay.
Carlisa Whisper. Careless whisper. I'm sorry, careless whisper. Why I said Carlos? Question. You got your hand raised. Go ahead with your question.
Hello, can you hear me?
Yeah, we can hear you.
How do you set up the indicators or the yellow line?
Yep. In your homework for tonight, I have a video for you showing you exactly how to set your screen to look just like mine. Okay. So tonight in your homework, you actually get that.
Okay, thank you.
No problem. All right. So right here on my screen, does anyone see a decision-making time? Do you guys see a decision-making time? If you do, let me know. Let me know where you see decision-making time in.
Yep.
You see it. I hope you see it. All right, y'all see that. Okay. Good stuff, good stuff, good stuff, good stuff. It's right here. Booyah. Decision-making time. And with this is the 4-hour chart I'm on right now. Decision-making time. So let's see what's happening. We're dating. What are we? It's never a right time to say goodbye. Boom, she drops. And then boom, that's money. Then what happens right here? Another decision-making time. So this is what, when you have that other decision-making time, think about it like this. We're dating. Boom, boom, it runs away. You come back right here again. You either dating that same person, you're dating somebody else now. Boom, boom, boom. What happened? What are we? Boom, it falls again. 2 opportunities, strictly using decision-making time. If you see this and understand this is decision-making time, you had 2 opportunities to make a whole lot of money. Boom, 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 boom. Right there, off of decision-making time. Y'all call out any stock, put it in the chat. We're gonna pull them up and we're gonna run through them so you can see them. Any stock, AMD, boom, here go AMD, decision-making time. Right here, clear as day. Oh, there's a few of them, I just saw one. Right here, boom, decision-making time.
When you come up, you bring my cup. Yeah.
That's decision-making time. Boom, right there. Here we go. Why is that? Hold on one second.
Hey, Phil. Yeah. Put me a few cubes of ice in. Put me about 2 cubes of ice in.
All right, there we go. All right, so boom, we have decision-making time right here. Decision-making time. Boom, she falls down. It's AMD. Let's find some more AMD. This is the 4-hour chart. Right here. Decision-making time. Let's find some more. Decision-making time. Beautiful one, actually. Dating, non-EMA, 21 EMA, right beside each other. We're dating. What are we? Baby, you know I love you. Meet me at the altar in your white dress, jagged edge. Boom, look at that run right there. That's money. This is a lot of money right here. Okay, boom, somebody said in the video. Let's put up in the video. What I'm showing you, y'all, is that this is not rocket science by no means. And you're gonna get tired of me saying the same thing over and over. It's about telling the story, Chris. It's about the story, Chris. It's about the story. All right, right here. As soon as you put up the screen, you see a decision-making time right in front of your face. What is that? Decision-making time. This is in the video. Dating, we're dating. What are we? Baby, I love you, jagged edge. There we go, take off. Another decision-making time. And think about this, the longer the decision-making time, the more powerful the move is. Check right here. Decision-making time. What are we? Jagged edge. Meet me at the altar in your white dress. We're not getting any younger, we might as well do it. Do y'all see that? All right, I see you got some hands raised. Let's go with Careless Whisper first. Go with your question. Careless Whisper, go with your question.
My fault, Chris. I didn't put my hand down. Let me
Oh, okay,
figure
no
that
worries.
out.
All right, no worries. Gregory. On you, Gregory.
You couldn't say my last name.
I was about to say butt ram. I'm like, it can't
I
be
know.
butt ram.
Hey, look, that's how I came up. Man,
All right, go ahead.
I ain't really got no question more, but I just wanted to.
You kind of low.
Can you hear me?
It's a little low. I don't know if your microphone away from you.
How about now?
Yeah, that's better.
Okay. No, I didn't really have such a question more than I had to say that everything that you're saying is real because I've been doing the trading, and I'm talking about just doing the 5-day stock challenge. I'm only doing the 2 witnesses, right? I'm doing the lines and I'm doing the 9 EMA and the 21 and the 200. And what I'm saying is that I'm talking about no matter what, and I haven't even just done every single, like I haven't done the same ones. Like I do SPY sometimes, SPX, but I've been doing other ones, just testing them out and looking at it. And every single time I see that DMT, that decision-making time, it does exactly what you're saying. And I haven't lost yet.
That's good. Congratulations.
In my first 4 days of trading, I have not lost one time. I was getting close to losing Thursday. I'm like, oh man, I got to $10 and I said, dang, I should have got out at 85. It was like I got to 10, but I left it alone. I jumped out because I seen it, and then I just waited till later, and then it ended up being $130 day. You know, it still wasn't the greatest, but
that's a good day.
Yeah, it's a big day. But the thing, like what I'm saying is, this is exact everything that you're saying right now. That decision making time is really the time. I'm like, that's what I'm like. I'm like, that's the time, you know. And I'm sure, like you got like I'm a rookie at this. I'm not somebody that's been doing this for a long time. I haven't been in no other classes. I only did the 5-day. This the first 5 day. I ain't been in no previous classes. I ain't nobody that did this before.
Wow. So, wow, that's what's up.
You understand what I'm saying? So your teaching is excellent. The way that you explain things is excellent. And the way that I'm able to read these candlesticks now is confusing to me how fast I learned that in 5 days. That's why it was like it was easy as heck for me to jump into the master class, because it was like, why not? This is crazy. But I really had no question. I just wanted to give you accolades on the teachings and how real this is and how good it worked, because this week already it was like, I think I'm up $815. You know what I'm saying? Just by, you know what I'm saying? Without just straight up. So that's what I wanted to say. So I just wanted to tell you, I appreciate you, man. And this is real for anybody that don't believe.
Congratulations. Congratulations, man. All praise to the Most High, man. Listen, if you do that off of just 2 witnesses, man, good gracious, wait till you see everything else. You're gonna be like, holy crap. Holy crap. You're gonna say, I can see clearer now. The rain is good stuff, man. Thank you.
Okay.
All right, Rick, it's on you.
Hey, Chris. Yeah, I just want to clarify on the 9 and 21 line, EMA. It seemed like when you decision making time, they're close together, but you showed something a few minutes ago where they were a little far apart.
Yep.
So you can
think about this.
Go ahead.
No, I'm sorry, I didn't mean to cut you off. Go ahead.
No, I just want to clarify decision-making time. I was thinking the 2 lines, the 9 and 21 have to be close together, but they can be apart, and that's still, as long as they're consolidating or dating, if you will, then that's still decision-making time can come up, right?
Exactly.
When they separate.
Exactly. It's like this, for example. It's
Yeah.
kind of like, you see this space right here? They're not right beside each other. Okay, they're not right beside each other, but they kind of here, right? And even for right here, let's move over a little bit more. Right here. We can see right here, they're not just right beside each other again, but there's some space in between, but they're close to each other, okay? They're close to each other. So you can definitely, as long as they're kind of horizontal, that's the main thing. As long as they're horizontal, right? When I'm saying horizontal, I mean looking like this. As long as they're like this, line and a line based. If it's like this, that's not decision-making time, okay? We want to see horizontal.
That's not decision-making time right there?
This right here is not decision-making time. This is decision-making time.
Why is that?
Because if it's horizontal, that means it's going on a trend to an upward. This is an upward move, okay? We want to see when it's consolidating in a straight line, okay? It's bouncing back and forth through there. This is an upward trend, what we're about to discuss right now, okay?
Gotcha. Okay, cool.
Great question. That's a great question. Wayne, it's on you, buddy.
I think you kind of went into what I was going to ask about. I was going to start asking about where does the 200 EMA start to play in?
Yep. So right here, for example, on this 4 hour, this 200 EMA is doing what? Downward trend, right? So as long as this is in downward trend, the market can be running all the way up here, but we know the overall market is for this particular stock on a downward trend because the 200 EMA is still going down. Okay. Now, when you get a 9 EMA, a 21 EMA, and a 200 EMA, all that decision-making time, you just quit everything. You quit your job. You quit everything. You tell your wife you're not coming to bed. You tell your husband you're not coming to bed. Whatever it is, you come and sit here and stand at the computer like this. What you gonna do, computer? You gonna go up and down. But whichever way you going, I'm buying to put or a call. I don't care. Okay, because you know it's time to make money. That's a powerful time frame. Okay, whenever the 9 EMA, the 21 EMA, and the 200 EMA are right beside each other, especially on the 1 year, 1 day time frame.
Is there an example of that? I'm sorry, Chris.
I can try to find an example for you. Off top of my head, I don't know, but let's go through some charts and then we see if we can find one. Okay. All right, let's look at David M. You say they see something. Okay. David M.
Hey, Chris. I was just looking at this and I noticed I'm always trying to look at the bottom to see what date you're looking at when you're looking at the DMTs. So, but I end up looking at the upper window to see what the date is. But because previously, I think a couple of times, I think when JT was running through it, there was a date down there. So you could see as you're scrolling through these, DMTs. So is that, I mean, should I focus on that or just disregard that and just look at the DMTs that you're talking about?
So when you're saying about the date, so there's a date up here. There's 2 dates you can look for, right? So here's one right here. You can look right there.
Right.
And then down here at the bottom as well. This is the 4 hour, but if I was to go to the 1 hour, you can actually see, the 1 year, 1 day, you'll be able to see the dates down here.
Okay. Oh, I guess it's just the way my screen is. I can't see that. Yeah.
Okay. Gotcha.
Yeah, that's it. Okay. I'm good.
All right. Cool. All right. Good questions, y'all. Good questions. All right. So that's DMT. That's DMT for you. Okay. JT, do we have any other questions in the chat?
Regarding DMT, no, we just had one about Discord. Other than that, Tamara, are you good to go? I'm sorry if I said your name wrong.
You said my name perfectly, JT. Sorry, thank you.
Thank you.
Yes, I think I'm good. I believe my issue was that I just wasn't sure where Chris was on the screen. I was looking at the most recent data and the 200 EMA was below the 9 and the 21. But when you scroll back to earlier dates, I see the opposite.
Oh, okay.
So I was trying to duplicate what you were doing while you were doing it. and didn't catch on fast enough that you had scrolled back. So I'm good.
Okay, perfect.
Thank you.
Perfect. No problem. Careless Whisper.
Hey, hey, it's me. When you were showing the graph, and at the bottom, I think you said it's RSI. Could you tell me what that is?
Yep, we're gonna go over that later on today.
Oh, okay.
Yep.
Sorry, I'm being ahead of myself.
Yeah, you know, you're fine. You're fine. You're fine. Joyce, on you, Joyce.
Okay, thanks for taking my question. The problem that I'm having is I kind of understand the DMT, and I watched how the non-EMA go down, but I've been following.
You went on mute, Ms. Jones.
Okay, so I don't know if I'm in the wrong time zone. I think I'm having a real issue with the time frames.
Okay.
Because when I follow the 9 EMA, you know, like he said earlier, it's very, to me, it's kind of clear to follow that. I got that part, and I expect the money to go up, but like you say, once I get in it, it just go opposite. So I don't understand that part. So in other words, does it really matter with the time frames? And I like to day trade. I'm talking about day trading.
Got it. So you're talking about a smaller time frame, like the 5-minute time frame you're looking at, right? So yes. So to answer your question, yes, it does. It does matter about the time frame. But one thing you have to think about, and we're going to get into that later, is understanding which contracts you're selecting, what expiration dates you are selecting. Okay. So for example, right here on the screen, I just happen to come down here to the 5-minute, right? If you're day trading, okay, we're day trading, and that whole morning, what do we have here? The whole day. Well, pre-market, remember gray area is pre-market. We have what? We have decision-making time, right? Okay, and then next thing you know,
right.
What are we, right? And boom, it breaks down. So once you get into this particular trade, you are going down and you're making money. Okay, you're making money. If you have a 2-week expiration, you're probably making more money. But say, since you don't know what contract to purchase, you purchase a contract that's going to expire tomorrow. That's called a weak delta, W-E-A-K. So therefore, now you're making money, but every time it comes back up here, you lose that money. Then it falls back down, you make some money. It comes back up, you lose that money. Why is that? Because you have a weak W-E-A-K delta, and we're going to get into all of that later on. So you buying the correct expiration date is what's going to help you make the money as well. It's a major part of buying and selling. Okay, and we'll get into that.
Okay.
All right.
Thank you.
Great question. And Joyce, is this have you taken the class before, or this is your first time?
Yeah, I took the 5-day one.
Oh, you took the 5-day one. Okay, got it. Okay, cool. All right, G code on you.
Okay, my man. So decision making time, I got that part down. I could spot it on the chart. So my question is, when they cross, don't do nothing with that. Don't make a move when they just cross each other. Before, like if you see the 9 over the 21, that's not a good entry. Correct?
No, it's all the same. All the same. Think about this right here. For example, right here. It's all the same. You see this cross right here? The green was down beneath and it crossed above. It's all the same. Only thing you care about is if it's decision-making time, it crosses up, that's great. Crosses down, that's awesome. It's the same concept. But the main thing you're looking for.
I'm saying if they not together close as far as dating and they just cross each other. I'm trying to see if I can find that example.
Oh, I know you're talking about something like, let me see if I can find. I know exactly what you're talking about. Maybe something that's similar, but that's not it.
Right there at 11:30 Go to 11:30 on your chart you on now.
Hold on. I know exactly what you're talking about. So let me ask, this is the thing about it. So I know exactly what you're talking about. You're talking about the lines like this. We going up, like one is going up like this. Let me draw it for you. Since I can't find, I can draw it faster. One's going up like this, and next thing you know, the
If
other
you
one is
look at
like
11:30 and go up that line right there.
11:30 right here. Oh, right here, right? Wait, what are you looking at? Hold on, I got
No,
you.
I'm looking at the time. Go to the time at 11:30
Time
and then go
11:30.
up right there where it cross at.
Right here? Right here? Or right here?
11:30.
I might be on a different date than you on, right? Are you looking at my screen?
I'm looking at your screen. I'm looking at your screen. Go
So
to 11:30 on
11:30.
your screen and go up.
Okay, let me move over.
The date, I think it's talking
The
about.
date. The date.
Right
not
here, the date. The
Yeah.
date. This is August 15th. The time 11:30?
in the time at the bottom. At the
Yeah,
bottom.
right here. So it's
Go to-
11:30 right here.
No, that's
Right here where I'm at right here, right?
No, not right there. It's not what I saw. You had it on when you was on the other screen.
Got you. But follow me though. Check me out. I know exactly what you're saying, right? You're saying follow my drawing. You saying if it's coming, the line's going up like that, and then this line is going up like that, and next thing you know, this line does this. Boom. Right?
I see it right here. Take your cursor and go where that rally at right there, the up rally. Right there. Come down. To the right, to the right, to the right, to the right, some more. Right there.
Yeah, right here.
Right there. Yeah.
Okay. So this is actually some decision-making time right here. But I get what you're saying. Yes, that crossover is very important. The crossover does matter, right? But when we're talking and thinking about a high probability trade, before any high probability trade, you want to see some type of consolidation. Okay, and we're going to get into that in a few. You want to see some type of consolidation. But this crossover right here, it is important because anytime it crosses over, that's an important thing. But every crossover does not mean it's about to go to run. Sometimes you can get a crossover just like this. It's a crossover, boom, it went up and it came back. And I don't know what it did for the rest of the day, but it could fall right back down. Okay. That's the same thing with the decision
So it's a
making
little
time.
more risky to do that. I got you.
Yep, but the longer it consolidates, the better the play is. But this is consolidation right here. And I can show it, I'll show that to you later on when we go over the box strategy. But this is some consolidation that you can base your play and your entry off of. This is a play that I would potentially definitely take. Okay. But I will break that down to y'all another time. All right. Good question. I know exactly what you're talking about. Mr. Clyde Turner, it's on you.
Yes, can you hear me?
Yes, sir.
Okay, on the chart, when it's decision-making time, are you gonna actually show us how to buy or sell when it's decision-making time, or am I getting ahead of myself?
Yeah, definitely. Yeah, we're gonna go over buying and selling all that stuff. So no worries. We're gonna show you everything you need to know. Yep, but yeah, you definitely are you ahead of yourself for just right now. Just make sure we want to focus on you being able to identify what you're seeing. Okay.
Okay, appreciate it.
Yep. All right, good questions, everybody. Good questions. Now, next thing is this. Okay, so we identify that as decision-making time, right? Now what we want to do is we want to understand what happens after decision-making time. Okay, after decision-making time. We call this the dog walking the owner. This is still part of witness number 2. The dog walking the owner. All right. Anybody here has a dog? Anybody here has a dog? If you have a dog, what's your dog's name?
Caramel.
Caramel. Whose dog name is Caramel?
It's G Code. My daughter's dog named Caramel.
G Code, and the daughter's name is Caramel. Stick to the G Code, and G Code got a dog named Caramel. Got it. So check this out. So say, for example, okay, it's decision-making time. We're dating. And we say that, boom, jagged edge. Meet me at the altar in your white dress. Okay. Now, what's about to happen is this. Say G Code is in Central Park, New York. I've never been in New York. I just always see all the movies, people running through Central Park and walking through Central Park with their dogs. I think it's real cool, right? So say G Code and Caramel is walking through the park. Okay, for this example, G code, you are the non-EMA, you are the green line, okay? And Caramel is the candlesticks, okay? So you enter into this trade, and next thing you know, Caramel sees a squirrel in Central Park. So Caramel does this, boom, Caramel runs away, okay? So Caramel has now run away from G code. So what does G code do to Caramel to bring Caramel back to him?
Calls Caramel.
Calls Caramel, yep. What else?
Pull back.
Pull back.
Pull back on the leash.
Yank on the leash. Exactly. Yank on the leash. Pull the dog back to him. Boom. So Caramel, boom, comes back to G code. Remember, G code is the green line. Next thing you know, G code and Caramel walking again. What happens? Caramel sees a squirrel again. Boom! Caramel takes off. Next thing you know, G code say, Caramel, come back. He yanks the leash. And what does Caramel do? Caramel comes back some. Next thing you know, Caramel takes off again. Boom! G code, Caramel, come back. Come back. Boom! Caramel comes back to G code. Caramel sees what? Another squirrel. Caramel takes off again. G code says what? Caramel, come back. Caramel comes back, boom, to G code. Caramel does what? She takes off again. Boom! Takes off. And G code say, Caramel, come back, and yanks the leash. Boom. Caramel comes back. You guys should see what happened. There's the candlesticks and the non-EMA has a magnet. They come together, the candlesticks runs away. Pull it back to the non-EMA, it runs away. Pull it back to the non-EMA, it runs away. Pull it back to non-EMA, and it runs away. What I'm showing you, what I'm telling you right now is this. The candlesticks always come back to the non-EMA. So when you're entering into a trade and get into a trade, whenever Caramel runs away, you do not want to enter into a trade. You want to wait till Caramel comes back to G code to enter into a trade. So in other words, whenever the dog runs away from the owner, just know the dog has to come back to the owner. You can always come home. You can always go back home. Like, I think Martin said that or something. Martin, on one of them TV shows, Martin said that you can always come back home. Okay, does that make sense? Let's break it down a different way. All right, let's use a different analogy. All right, say for example, you're dating, Jack and Ash, we're getting married. So boom, now let's take off. We planning the wedding, everything good. We planning the wedding. Next thing you know, somebody makes somebody mad, and now the relationship goes sour. Boom. Relationship goes sour. We thinking about cutting the wedding off. So next thing you know, what happens? We're right here, okay? And we talking about it. We listen, it's gonna be good. I love you, this and third. Boom. The wedding's back on. We're good to go. We're good to go. We're good to go. Next thing you know, something else bad happened. Boom. Well, I don't want to marry you no more. Wedding off. Boom. We make up, the wedding on. Boom. We come back, the wedding off. Boom. The wedding back on. Boom. The wedding off. Boom. The wedding is on. Do you guys see that? Y'all follow me? Y'all following it? You following what's going to happen? What's going to happen when you're trading? When you're trading, you're going to see these things happening in real time. Whenever the candlesticks are far away from the non-EMA, yeah, they definitely need counseling, Paul. Whenever the candlesticks are far away from the EMA, that's an opportunity if you're in the trade to take profits. Listen to me. If you're in the trade and it's far away from the owner, you can take profits, or you know it has to come back to the owner. And if you're not in the trade, you want to enter into the trade when it's at the owner. When it's at the owner, okay? Let's do another example, okay? Let's go to another example. All right, say we're in the trade. Boom, we're in the trade. At this moment right here, we're up $500. Boom, we up $500 right now. Okay. When the dog comes back to the owner right here, we're only up $200. Because whenever the candlesticks come back to the owner, we're losing money. Okay, boom, runs away again. Now we're up $1,000. Okay, comes back to the owner right here. Boom, now we're up $700. Okay, boom, takes off again, comes back to the owner. Boom, takes off again. Now we're up $1,500. Okay, is that making sense, everybody? I see William Watson got your hand raised. Go ahead with your question.
All right, quick question. Say, you remember, you see right there where you said $500 you made profit, and then went down to 2. You say, for instance, you don't have to touch anything, right? Or do you sell at that 500? Say you want to exit out.
Yep. If you want to exit, you just sell right then and there.
Or say, okay, say you leave it, right, and it drops down to 2. And a minute later, it goes back up to 1,000. That same negative 200 went to 1,000. Is that what you're saying?
Yeah, exactly. So this is not negative 200. So you add positive 500 profit, then your profit dropped down to positive $200. And then next thing you know, boom, it went up to $1,000. So when you're trading, it's not going to be, okay, I'm up 100, up 200, up 300. You may be up 500, down. Next thing you know, something falls down, and now you down 100, and then boom, it goes crazy on the run. Now you up $600, $700, $800 to $1,000. It's up and down sometimes, right? So, but you have the opportunity to take profits whenever you want to. Whenever you want to take profits, you can take them. Okay.
Okay.
That makes sense?
All right. Yeah, makes
sure?
sense. Thank you, sir.
Okay, no problem.
Right.
All right, I see we have boom, boom, user one.
Oh, yes. Just piggybacking on what William was asking, does that depend on how you set your stop loss, depending on how much you're going to profit, or whether it's to put a call? So if you were to, for example, when it gets to 500, you've already set your stop loss if you think it's still going to keep going higher. So you can set your stop loss closer towards 1,000, and even though it drops down, you're still waiting for it to go back up. Or you can get out at the 500 and re-enter it again at the 200 and keep doing that multiple times.
Yep, exactly. So say for example, you enter into this trade, right? And we enter into this trade, you set a stop loss, this red line right here. This is our stop loss of, so it's called a stop loss of negative, so put parentheses, that's what's going to be negative 200. So whenever you see parentheses, that means that's negative. So you're willing to lose $200, okay? Negative 200. And say you want to make $1,000. All right. So you set your limit stop to take you out with profits right here. We're just gonna call this profit stop 1,000. Okay. So that's what it's gonna look like on your screen. You're gonna have a red line right here and a red line right here. Okay. As long as it does not come back and break this red line, you're going to be in that trade. So when it goes up here to 500, it comes back down to 200, you're still in the trade. When it comes up here to this $1,000, boom, you out. It never comes, it's not going to come back to the 700 because you got out right here at this $1,000. Boom, you're done.
So those decisions will be made based on the volume. Like, for example, if you see a lot of large volume, and that all those things kind of help determine whether you're going to stay in that trade or not, based on
those particular things. If you don't have all this stuff already drawn, so what we're going to go through on in the future, right? Through the future needs classes, we're going to get more in depth on what drives the market and things of that nature. what you're going to understand here is, the main thing to understand right here is, when you're in your trades and you see it's running up and it's going good, the next thing you know, all of a sudden it falls down, you understand that right here, this non-EMA, this is a level of support for you. Okay, this non-EMA is a level of support for you. And with this being a level of support, we can stay in this trade as long as it does not break through this non-EMA and closes at the non-EMA. Okay, so what I'm showing you right here with the dog walking the owner, the dog runs away and comes back to the owner. When the dog came back to G code, as long as that dog ran back up and ran away, G code can stay in the trade. But as soon as that dog goes up, comes back, and decide to go back that way, you get out. As soon as it breaks this non-EMA right here and closes, for example, right here, a red candlestick opens at the top and closes at the bottom. As soon as it closes on the bottom of, as soon as it breaks this non-EMA and close, that's when you get out. All this right here is showing you that you can stay in and ride this baby up as long as it stays above this non-EMA. Does that make sense? Give me ones if you understand me. Give me twos if you lost. Ones if you understand me, twos if you lost. Okay, good stuff, good stuff, good stuff, good stuff, good stuff, good stuff. All right, I see Tracy, got a question?
Yes. So if I set my stop loss, set the stop loss at you know, when it's going up, I don't have to in my stop loss, once it hits the stop loss, it is not going to execute or sell anything until I guess manually do it myself, right? I can wait until the end of the day, or if I'm working, if I'm doing something else.
No, you don't have to.
Get
No,
back
no, no,
to
you don't have
it.
to do anything. No, you don't have to do anything. You don't do any. Once you set your stop loss, the system does everything for you. You can close your computer and walk away and not come back ever again in life. That stock is going to sell once it hits that level. Automatic. Everything is automated. As long as you understand the story, you can automate the whole thing.
Okay. All right. All right.
Yeah.
That's it.
Tanya, on you.
Okay, is there ever a time where you set the stop loss target and it doesn't hit that target before the expiration date, or is that all built in, the expiration date and all that?
Yep, so we'll get into it where you can do it's a good to close. And basically what it can say is, okay, at the end of the day, if that level was not hit, you can, it stays and happen overnight. But you can move your stop loss and all that stuff. So say, for example, if you're up $1,000, you say, okay, I'm up $1,000, I can take these $1,000, but I think it's still going up. You can move that stop loss from being a negative, like if we have a stop loss right here as a negative 200, we can cancel that negative 200 stop loss and move it up here to $900. So now my stop loss is at least $900. So I'm guaranteed to make at least $900, somewhere around $900 for the day. If it keeps going up, move it up some more. Move it up some more. Or you can do a trail stop, and we get into all that stuff. So you can move it as you go.
Okay.
Yep. Quentin M.
You actually just answered my question just now, but I do have another question. What makes you determine what do you set your stop loss as? Because really, I don't want to lose any money. So how do you decide that?
So what we'll do is when we get into buying and selling, that's when we're gonna focus more on stop loss. But we base it off of percentages, right? What are you willing to lose on this trade? But we'll get into the stop loss aspect of it when we get into buying and selling. Okay. We're gonna dig deep into it. And that's all about risk management. Okay.
Gotcha.
All right, Rick, on you. That was Rick, right?
No, this is Rick.
That was Quentin. Yeah, Rick, what's going on you?
Yeah, you said when you if you're not in the trade and the dog goes away from the owner and then comes back, you can enter. If you enter, how do you know if it's going to go back up or if it's going to go down?
You're looking for confirmation, like confirmation plays. For example, when it comes back to the owner right here, boom, it comes back to the owner. Okay. So we're gonna get into that more as well, but we see that this is a level of support because we see right here it hit, right here it hit, then it comes on and hit right here, boom. Next thing you know, this candlestick right here is a big boy candlestick. Boom, take off. And what did it do? It broke this top level. We're gonna get into all that stuff later on, but we're gonna show you confirmation things to look for to be able to get into the trade. Okay.
Okay. All right. Thanks.
Got you covered. Yep, no problem. Live better on you.
Okay, it sounds like you may get into it later, but right where you mentioned the big boy candle.
Yep, right here.
Right. Yeah, my question is, see how the red candle right before came a little bit under that 9 EMA, the green, but you stayed versus up here, you would have got out up at the last red candle.
Yep. So think about it this way. So for example, it closed right on it, right? You got a small little piece of it right hanging off, but the most part is on it, right? Up here is 2 different ways to look at it. This is the beginning. This is the beginning of the run. All of this right here is the beginning of the run. This right here is like 20 days later. Like, holy crap, it got to end sometime, right? You see what I'm saying? So that's kind of just how you look at it. But this is like a small little portion, right? This right here is the whole body's underneath it. And as you can see, the non-EMA is starting to bend and trying to bend down some too. That was a big fall.
Okay,
but we'll get into that with other examples as well.
Okay.
Yep,
okay.
All right. Good question. Hey, listen, great questions. Great questions. Great questions. Okay. All right, let's keep going. Another example. All right. So here we go. Decision-making time, decision-making time, decision-making time, decision-making time. We're dating, 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 we're dating. What are we? Boom, what are we? Chris Brown, never the right time to say goodbye. What happens? Boom, the dog runs away. Next thing you know, the dog comes back to the owner. The dog's walking with the owner, the dog's walking with the owner, the dog walking with the owner, and then boom, what's G Code's dog name again? Glam? Glam or something? Who?
Karma.
Karma. Caramel. 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 Okay, Karma, got you. Boom. The dog runs away. The dog comes back to the owner again. Boom, runs away again. Comes back to the owner. Boom, runs away. Right here, comes back to the owner. Boom, get out. See that? Out, get out. Like the movie, get out. Do not go into that sunken place, okay? Get out. Why do we get out? Because the candlesticks broke. It broke. It broke the non-EMA. A green candlestick starts right here. It runs up here. Boom, it closed right there. Get out. Even though the next day it opened right here, came up and then broke back through, get out, take your profits. You can always get back in. You can always get back in, okay? Then what happened? Another decision-making time. We're dating, 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 dating. Then boom, a whole flood happened. Okay? Do y'all see that? You guys see how it runs away, come back? Okay, so right here, for example, ask you guys a question. Once Caramel runs away, and Caramel is right here, okay, Caramel is right here, G code is right here, do we enter into that trade now? Yes or no? Do we enter into the trade now with Caramel being down here? Caramel's right here.
No, it's too
Oh,
far.
no.
Oh, no,
Too far away.
Exactly. No. What about when Caramel comes back up here? Is this a good possible entry?
Yes.
Yes.
Exactly. Boom. Caramel runs away right here. Do we enter? Can we enter right here when Caramel's right here?
No.
Late. I mean, no, it's too
Why?
far away.
Because the play has already happened. The move has already happened. Remember this song if you don't remember anything. Don't go chasing waterfalls. Okay? Do not. This is called FOMO. You're going to see multiple times in the market where you see, boom, it's a big move just happened and you missed it. It's okay if you miss it. Wait till it comes back to the owner and then you get into the play. Right here, we've missed the move already. It already happened. Wait till it comes back to the owner, shows itself, and takes off again before we enter into the play. Okay? Let's go look at some live examples. Look at some live examples in the market. Okay, right here on the video again. Okay, right here in the video. Let's go through the whole witness. Okay. All of this stuff right here. What is this right here? Decision-making time, correct? Decision-making time. We're dating. We're living life. Fabulous. Everything. Squad goals, whole nine, everything great. Taking pictures for the gram, doing it for the book. Boom. Next thing you know, what are we? And this person didn't just say, Chris Brown, sorry, we're breaking up. This person did a nasty breakup, like, what are we? And this person just said, okay, I'm gonna be right back, and never came back. Okay, that's what this person did. This big boy red candlestick right here, she's like, what are we? Or he like, what are we? The person say, I'll be right back. Person never came back. No closure, okay? So boom. What are we? Chris Brown takes off, boom. This move happens. The dog is right here. Do we get in?
No.
Yes or no?
No.
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 We wait. We wait for it to come back to the owner because we're smart. We're smart. We know when it runs away, the dog always coming back home. Boom, 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 boom. It comes here. Now what happens is here. Boom. What do? We got a support level right here. It breaks this level. Boom. We get in, take those profits. The dog is forward from the owner again. Do we get in here? No. We're smart. The dog runs away. The dog has to come on back home. The dog comes back home. If you were in a trade, you get out right here. Get out. Bye, bye, bye. Boom. What happens? The dog with the owner, boom, the dog runs away again. Money. That's called money, y'all. It's called understanding the story. All of this called is money. It's a simple way to make freaking money. The only thing you have to do is be patient and wait for your play. Understand you are going to miss plays. I miss a lot of plays, but I do not go chasing waterfalls. I stick to the rivers and the lakes like I'm used to. Okay? All right, let's go find another play. Y'all, this is on every single stock. Every single stock this stuff is on. All right, let's find another. Oh yeah, right there in front of my face. Decision-making time. This is the 4 hour, y'all. Decision-making time, all this. Decision-making time, okay? Dating. What are we? Booyah, what are we? What are we?
Jagged edge.
Jagged edge. Let's go, baby. Boom. Dog runs away, come back to the owner, takes off again, comes back to the owner, takes off again, comes back to the owner, takes off, comes back to the owner, takes off, comes back to the owner, kind of takes off, boom. Right around here, you can stay in if you want to, but right here is definitely time for you to get out. Oh yeah. I'm out right here because I'm scared as crap with that wick. I'm out. Boom. Taking my profits. I'm gone. Right? There you have it. That's witness 2. Understanding decision-making time is the first part. You get into your trade. Witness number, I mean, not with the other witness, but the second part, the dog walking the owner, is boom. You get up, it runs away, it comes back, runs away, come back. And if I'm y'all, right, if I'm doing day trading, when it runs away, day trading, take your profit if you're in that trade. Okay, you don't want to spend too much time with it coming back if you're in a day trade. Okay, because when it comes back, you're gonna be losing money. If you're a swing trader, you got a 4-week, 5-week, 6-week expiration date, you're okay with the fact that when it comes back, because you have a stronger delta. Most day traders will have weaker deltas, and we're going to talk about that later on, okay? All right, y'all good? Y'all with me? You good? Okay.
Yeah, we good.
Let's do something. Let's do something. Let's do something. Let's put witness number 2 with witness number 1 and see if we can see the story a tad bit better, okay? All right, so check this out. Boom, 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 boom.
Don't love it, Evan. Don't love it, Evan.
I swear that's what I was doing, wasn't it? That's what I was saying, right? So check this out. Okay, now let's take off everything as far as that. Let's take off this. Take off witness number 2. And here we go. Okay. Now what I want to do is I want us to do witness number 1 right quick. Okay. Witness number 1 is what, everybody? What is witness number 1?
9 EMA.
Support and
Witness-
resistance.
There you go.
Support and resistance.
Support and
Exactly.
resistance.
And what I'm going to do is I'm going to focus on this area right here. Okay. I'm going to show you guys some focus on this area right here. So if I'm drawing my support and resistance, I see a level of resistance right here. Why do I have resistance right here? It hit, couldn't break through, hit, couldn't break, hit, couldn't break, hit right here, hit, all those levels it couldn't break through, right? And I see a level of support right around here. Boom, hit right here, hit right here, hit right here, kind of hit, boom, kind of hit right here, hit right here. I see that level of support. Okay. Now, if I see my support and my resistance, what does this look like to you guys? It look like my stocks, my candlesticks are inside of a what?
A box.
A box.
Exactly. They're inside of a box. Okay, so if I was to draw a line right here, boom, and a line somewhere right here, you would say that's a box that these candlesticks are in. Whenever you see your candlesticks inside of a box, you start licking your chops. You tell your boss you're not coming in. You tell your wife or your husband you're not coming to bed. Okay? Because you're looking at this box. You're going to focus on this box. Why is this important? Because the stocks are trading inside of a box. Whenever the stocks are trading inside of the box, what's going to happen? You want to get outside of the box. We don't want to live in a box. Crabs should not be in the bucket. Let the crab out of the bucket. Okay? Someone said, like crabs in the buckets. Another smart person said, well, crabs aren't supposed to be in buckets. We want to be free. Right now in life, we are inside of a box. We go to that job for 8 hours. And right now you're taking this class so you can do what? Get outside of the box. Be free. Okay? Check this out. Now, witness number 1, we identify support and resistance. Okay? If we do this right here, and now we do this, and we put our EMAs inside of the box, it tells a story. You guys see this story? Look how it looked without it. Check this out. Boom. Without it, we see a box and candlesticks. Okay. With it, we see a box with candlesticks with some lines. Okay. But what are these lines telling us? What do these lines tell me right now? What do you know these lines are saying? What is it?
T. Dating.
It's what?
Dating inside the
Dating.
box.
Dating.
Dating is DMT.
Decision-making time.
Exactly. It's decision-making time. So now what do you have? You have decision-making time inside of a box. So what do you know by using two witnesses? You know at decision-making time, there's always going to be a question asked. And what question is going to be asked?
What are we?
What are we?
What are we? So what you have to find out is this. When is the what are we question going to be asked? Follow me. Check this out. So right now, whenever you have a box and you have decision-making time inside that box, that is a high probability trade. That means it's about to go down. Not down, I mean, or up or down. When I say down, a play is about to happen, okay? So check me out. So right here, we're dating inside of this box. So we're down here. We came up to the top of the box. We came to the bottom of the box. Went back up to the top of the box. Came back down to the bottom of the box. And this whole time, we have decision-making time. So we're dating, 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 and something starts to happen. The non-EMA starts to cross over, okay? We come through support and we break through support. Do we enter as soon as we break through support?
No.
No.
Why? Because we have to do what? We have to come back and
Retest.
Did these candlesticks come back and retest right here?
No.
Exactly. Did it retest again right here?
Yes.
Yes.
But what happened when it came back and retest?
It couldn't break back up.
There you go. It couldn't break back up. It stayed underneath the non-EMA. So the non-EMA is still going down. Because what's pulling the non-EMA down is, remember, the non-EMA is the last non-closing candlesticks. So this candlestick is staying down here, which is pulling the non-EMA down.
Chris, not to interrupt, but your mic sounds choppy. I think something
choppy,
came
y'all?
loose.
Yes.
Good right now? I'm good.
No.
You said no?
No, it's still choppy.
Hold on one second. Let me try something.
There you go.
Okay, it's back.
That's it.
He gone now. Oh, there you go.
I'm back. Y'all good?
Yeah.
Yes.
All right, beautiful. All right. So what we're seeing now, what we're witnessing now is this. The non-EMA is coming down, and it's coming down, and it's coming down, and we're getting more consolidation on this support level, more consolidation on this support level, and then it happens. It breaks through again. There we go. We enter into our trade. Chris, why do we enter into our trade? Because we already broke this one time, and now these are the tests right here. These are the tests. It came up here and pushed right back down. Boom. We're testing and we're under this support level again. We enter into this trade. We enter into this trade. When we saw it push up here and push right back down, boom, I'm entering right here. I'm all game. I'm entering. And look what happens from there. We come down here. Boom, we come down here, comes back to the own. It shoots up right here, comes back down, push down some more. All this right here is money. Y'all see that?
Yes.
Let's find another one. Let's find another story, just so you guys can see that this happens all the time. Let's find another one. What's another stock? Anybody tell me a stock. Blurt it out. Don't even write. Just blurt it out.
Tesla.
Tesla. T-S-L-A. T-S-L-A. Tesla. All right. Let's go find us a Tesla play. Boom. Right here, Tesla. Right here in my face. It might be a bad example right here. Might be a bad example. It worked out great. I'm gonna choose another one. The reason why this is a bad example is because of this. And a matter of fact, let me show you the bad example. That's perfect. So we're gonna focus on this area right here, okay? And then I'll find another one which is a good example, okay? So what we're gonna do is we're gonna do what? We're gonna do the first thing we're gonna do every time. We're going to draw our
Support resistance.
There you go. Perfect. Support and resistance. Okay. All right, here we go. Support and resistance. Back up. I want to show you that. I do want to show you. Here you go, right here. So I feel like my screen is like delaying on my end for some reason. All right, here we go. First thing I'm gonna do is draw our support and resistance. Is this where I was at?
It looks different.
Yeah, it looks different. It's over here. Here we go.
Yeah.
We'll come back to that. It's right here. Okay, boom. This is it. So boom, this will be a level of support for us. Why would this be support? We hit right here and all this consolidation right here. Y'all see that? Move my studies first. Okay. So boom, all these hits right here. Okay. And then right here would be a level of resistance.
Resistance.
So here we go. Boom, 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 boom. Okay. So right here, this is what we got. Okay. And now let's add in our studies. Sets. Boom, you set. Okay. Boom. Here we go. Now, check us out. We have a decision-making time inside of we have a decision-making time inside the box, right?
Right.
Great. Boom, boom, boom. Great. Now we see it move up and we have a big boy explosion day right here. Okay. Big boy explosion day. So granted, if you look at decision-making time right here, right, where we're dating, we're on support, dating, boom, it takes off. Potentially, if you're day trading, you would have gotten some of this money. If you were swing trading, you probably would have missed it, okay? But if you're day trading, you probably got some of that money, okay? But look what happens next. The next
Hey, Chris.
Yep.
Hey, I was looking at this stock right there where you at. That's before I think that's before the day. That's before the trading day happened. That happened right before the trading day. Am I correct?
What part?
That big boy candle. That big boy candle up.
This green one right here. It actually happened right as soon as the market opened. This is the first 4 hours of the day right here.
Right.
That's your pre-market.
No, this is the first 4 hours of the market. So at 9:30 to like 12 o'clock or 1 o'clock, somewhere around there. This is a 4-hour candlestick. Yep. So what happened is, go ahead.
But if I'm not mistaken, because this is where I was telling you about yesterday that I got in at. Not right here, but right after that, shortly after that, the NASDAQ started dipping and it dipped fast. So
gotcha. Okay.
Right. So I had a question. How much attention do you pay to what exchanges on to because what I was doing was just watching the NASDAQ, and as it started to drop, that's when I got in. As it started to drop, and I just stayed with it. And once that green line broke down below the yellow line, it just kept coming back to owner, and I just played it all the way down. So how much attention do you pay to the particular exchange that stock is on to help you in your
Very much.
decision making too?
All the time. If I'm trading any stock, I got SPY up. If I'm trading any technology stock, I got QQQ up. Yep. So, and we're definitely getting that in the future as far as what you should be looking at when you're in a trade and out of a trade. But I'm looking at the S&P 500 spot, and I'm looking at QQQ, which is the NASDAQ 100, all day, every day, no matter which stock I'm in. Yep. But we definitely get into that. That's a great question, okay? That was a great comment. So right here, though, we got decision-making time. Boom, it shoots up. You probably got some of this money running up. But what happens next? What happens next? It comes down and boom, it falls right back down. But look what happened here. Remember what I said? Sometimes it does not test, right? Did this stock ever come back and test resistance?
No.
No.
Never came back and tested resistance at all. Okay, so remember what I told you. Sometimes when it pushes away and runs away, when it breaks through resistance, you do not enter until it tests if you want to have a high probability trade. Because what happened was the next day, look what happened. When it did come to test, what did it do? It fell right through that hole. You see how it fall through that hole? You see it fell through that hole, and where did it come to? Right to support, right?
Yeah.
Then look what it did. It fell right through support. Boom. Then what did it do? It came back and tested this support right here. Fell right back down again. It came back up here, tested support again. What did it do? It fell from freaking grace. Y'all see that? You see why you don't go chasing waterfalls and you stick to the rivers and the lakes like you used to?
Yes, sir.
Because if anybody else saw this and they say, oh, that's a big boy candlestick, big boy move. Let's go, let's go, let's go. You get into that trade, I'm gonna hold this trade overnight. You wake up the next morning and the whole world is ended for you. Okay? Testing is very important. You may miss moves. Who cares? Make sure it tests, okay? I'm glad we saw that example. I wanted to show that to you. When things go the wrong way. Okay? When things go the wrong way, all right? Now, let's focus on when it goes the right way, okay? Let's move over here. Okay. So for example, that's just too bad. That's just too bad. That's too much. Right here. Where I just saw it. Let's see. Right around here. Okay. Boom. Right there. Resistance and support is right around here. Okay. So what we have here again is, and I probably would have this right here. Resistance right here. Okay. So we have a box. Once again, this is another example. Great. Be gracious. We keep finding the same examples. I'm gonna remove this right here. So once again, y'all see this box right here? Today, the Most High must be saying, show some examples when they don't retest. Y'all see this right here? Boom, boom, boom. Mm-hmm. We're dating inside of a box. See, we're dating inside of a box. Y'all see that? We're dating inside of a box. And then boom, we break the resistance. Do we enter right now?
No. No, sir. Oh.
We wait for it to come back and test. Did this stock ever test?
No.
Over here.
No.
No testing. And then when it did come out to test, what happened?
Went through the
boom.
Back to the floor.
All the way through the floor.
Came all the way through the floor. But look right here though. Right here, it showed up when it broke through the support, it came back and test. Mm-hmm. Nothing. Came back and test again, hit that 9 EMA, and what did it do? Boom, shot down.
Wow.
Came back to the owner, did a little news, boom, shot down again. Testing is very important, okay? That's Tesla. Tesla gave us some good examples, didn't it? That's some great examples for Tesla. So another stock. What's another stock somebody else said?
So Chris, on that particular
hey, let's do McDonald's. Let's do McDonald's.
Hold on one second. Hold on one second. Somebody said, what stock did somebody else say? Somebody else said SOM or something?
No, I said-
XOM.
Okay, I
XOM,
said-
got you. XOM.
I
And
said
somebody else about to ask a
McDonald's.
question.
Yeah,
Got you.
I got a question. Yes.
Go ahead with your question. Yep.
Yes, regarding I guess you can redraw the resistance and support lines when it's you can redraw that again if you want to try to do get a put and make profit from that point.
Exactly. So what I would have done right here, I would have possibly drew a level of support right here. I mean, resistance right here. I would have definitely drew it in pre-market because this is my pre-market high and my pre-market low. So I would have had this right here. That's pre-market high. If I was to drill down on this day right here, what day is this? This is 5/5. 5/5. That's May. I'm on demand. I'm farther back. This is 5/5 right here. If I was to drill down, I would have had this pre-market high. Matter of fact, let me do this. So you can kind of see it this a little bit more. Let me remove this. That's a great question you just asked too. So boom, right here, okay? After this move happened right here, if I'm doing my pre-market high and pre-market low, my pre-market is right there for the high. My pre-market low is right here. Boom, boom, boom. That's pre-market low. And once I see it break that pre-market low, I would have made a whole bunch of money for the day because boom, look what happened. It fell straight down. Okay, that'd been a lot of money made based off of your pre-market high, pre-market low. So you always can go back and add more support and resistance levels. Okay, always go back and add support and resistance levels. Okay, so XOM.
Chris.
One second. Hold on 1 second. I think that's Tamara. Go with your question first. See, your hand is raised. Tamara, it's on you.
Oh, yes, Tamora, yes. Sorry. You mentioned several times pick any stock. Does fundamental analysis not really matter when picking a?
I think you went on mute, Tamara. You're on mute right now.
Oh, crap. Okay. So you mentioned several times pick any stock. Does the fundamental analysis not matter when picking a stock for swing trading, day trading, scalping? Is it not?
So when you're trading stock options, you focus more so on technical analysis, right?
For options. Okay. All right.
Options. But when we're when we're building our portfolio and we're picking stocks to choose from, that's when we go to the fundamental aspect of it.
Okay.
So,
all right.
That's kind of how
Sorry, I'm still trying to wrap my head options. I'm so accustomed to stocks that I'm on track.
The thing about
I'm good.
No, the thing about it is what you can do, since you do have that fundamental background, you can do the fundamental analysis on the particular stock. Like go back those 5 years, go back those 10 years and see what's what. At the same time, what you're going to do is when you go back 10 years, you're going to draw support and resistance from 10 years ago. You go back 5 years, you're going to still draw support and resistance from 5 years ago. And then when you're looking at your fundamental analysis, when you're looking at, okay, what's the company's revenue and all these things you're looking at, you can say, okay, earnings is coming up 3 quarters ago, this happened. And then you can still kind of put with the technical analysis and then you'll be able to tell another story. But for options, you don't ever have to say what was the company's earnings, or what was their revenue, or what was their EPS and all that stuff. It doesn't fly because we're making more so short-term trades and long-term trades.
Okay, that makes sense.
Yep.
Thank you.
No problem. Was that Paula who has a question, I think?
No, I didn't have a question. I gave you the stock XOM.
Okay, got you. All right.
Thank you.
Let's move forward. Are we on XOM now? Yes, this is XOM. All right.
Hey,
XOM.
I have a question, Chris.
Okay, who is that?
This is Felton.
Yep, go ahead.
All right. Since you're on this stock, can you go through your entire process from the pre-market and just working your way through the box and the support and the resistance, just whatever your procedure would be. You know what I mean?
Yeah, I got you. Yep. And I'm gonna demonstrate that once I go through this, we're gonna go through that as well.
Okay.
I got you covered. Yep, no problem. All right. So say, for example, right here, step number 1, we want to find support. There goes support right here. Okay. Now we want to find potential areas of resistance right here. Okay. And if you see why, support, 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 resistance right here, resistance right here, resistance right here. If we go back in time, we see this was support, we see it was resistance as well. Okay. Now, what do we have? We have a stock that's trading inside of a what?
Inside of a box.
Inside of a box. Okay. Now, we are dating. We're dating everything. Cool, googly moogly. Dating. Okay. Do it for the gram one more time. Okay. Boom. Now look what starts to happen. The non-EMA, oh, 1 second. Look what happens. We're dating. We bounce off of here. We come up here. We bounce off of here. We come up here. We bounce off of here and we start coming up here. Now look at this. The non-EMA is coming closer and closer and closer to this yellow line. Okay. The candlesticks that we're going to talk about tomorrow, the candlesticks are starting to stair step. They're stair stepping. Okay. We're going to talk about it tomorrow. Okay. Boom. But then the non-EMA crosses over the 21 EMA. At the same time, we have a big move through resistance. Do we get in when we break resistance?
No.
No.
What do we wait
No.
for?
Got
We
it.
test.
We wait for the test. Does this stock come back and test resistance or the new support?
Yes.
Does it?
Yes.
Yes, it does. And when it hit it, what did it do? It shot up.
Good go.
And then what did it do? It consolidated post-market, pre-market consolidated. And then in the first one that opened up that morning, what time was it? It at the non-EMA. What did it do? Baby, baby, boom, money. It's a beautiful love story, y'all. Do you understand do you understand the words coming out of my mouth? Like Chris Tucker.
Baby, baby.
Look at the story.
Oh my goodness.
Just a story. And the only thing you have to do, I'm going to repeat myself, is understand the story and be patient. Listen, you do not have to trade every day. You do not have to trade every day. You just have to understand the story. When it broke through this resistance, you call out to work the next day, you tell your wife or your significant other, leave me alone. And you wait for it to come back here. And this is what I want to show you guys. Remember, we went over candlesticks and I said, this is a strong candlestick because it means where are we? Oh, right here. It means that the buyers are in control. This is almost like a doji candlestick right here almost. Y'all see that right there?
Yeah.
It's like a doji candlestick. What this is telling us this, remember, a red candlestick opens up where?
At top.
At the top, okay? So boom, this is what it's telling us. This is why we went over candlesticks so much, because I wanted you to understand the story. The red one opened at the top right here. No, don't go away, please. All right. My screen is just like really moving slow. I don't know why it's going. Okay. And tell me if y'all can't hear me. So right here, a red opens at the top. Boom, that's what opened it. At some point of time, it came to this level right here. Okay, right around here. Right. And then it shot all the way down here. Boom. Shot down here and basically tested, right? After it tested that level, what did it do? Boom, it shot all the way back up here and closed right here. That's powerful, meaning what? That the buyers are in what? Control. You see it? They're in control. Remember the other analogy I told you guys? This is why I go through these analogies. Remember I told you about the buyers. Remember I drew when we was going over support and resistance? I told you, you got buyers right here, buyers right here, buyers right here. All these buyers are down here, right? And then I told you, once it broke through resistance, it come back and test and it started to take off again. What did those buyers do? Those buyers start to do what?
They move up.
Move up.
Go. There you go. Now you get to see it in real life. Now these buyers came here, and when it came back and tested, it said, we buying in, baby. What you doing? Y'all see that story? It's beautiful. It's a beautiful love story. You just got to be able to see the love. Okay? Give me a 1 if you with me. Give me a 2 if you completely lost. 1s if you with me. 2s if you just completely lost.
One.
FRE stock option. Free me if you 2s. Okay, that's good. I love it. I love it. What's going on, everybody? Christopher Jackson here, and I'm so excited for this upcoming 5-day mastermind starting February 27th. This is not a challenge. This is a mastermind, and we're going to dig deep. I'm going to show you how to make additional income trading stock options while still working your full-time job. The goal is to show you that you no longer have to rely on your full-time job to take care of all of your expenses, right? And you can use money from the stock market to take care of all of your expenses, to pay your mortgage, to pay your car payment, pay your gas bill, pay the daycare, to pay your on your vacations, whatever you may have expense-wise, you can use the stock market to pay it. And we no longer have to rely on your full-time job to take care of those responsibilities. Because if your full-time job tap you on the shoulder and say, hey, listen, your services are no longer required, what then? If you don't have another source of income, now you're in a panic because you like the bills are still due. But if you have another skill set that you can do for the rest of your life, which is trading stock options, you are no longer relying on your full-time job to take care of your household responsibilities. Okay, so that's what I'm going to show you in this 5-day mastermind, how you can control your life and not rely on your job to take care of your responsibilities, but you can make money trading stock options while still working a full-time job. Listen, we have 2 options. We have VIP and we have regular admission. VIP is $497, regular admission is $297. I tell people to do the VIP. Why? Because you get more time with me. You get additional hour with me every single day. Okay, so listen, if you're interested, click the link below, and I want to see you in this mastermind. This is not for the weak. It's not for the weak. It's not for the weak. This is for the individual that's just sick and tired of being sick and tired, okay? So I see everybody in this upcoming mastermind. All praise to the Most High.